Hi there, this is Christian Dye from Latitude West Financial. It is March 28th, 2023. We are doing a real estate outlook. My special guest is Shirley Wong from BMO, and she is going to help to clarify some of the mortgage rules and changes, as well as these crazy rates that we're experiencing. We're going to take a look at a couple of different topics, but one of the areas I'll be talking about is what I see is happening in the real estate market for those people who are looking to invest. So a quick little reminder is that the information given here is not to be considered financial advice. These are for educational purposes only. We do recommend that you reach out to a licensed professional if you are, such as a realtor, mortgage broker, financial advisor, if you were going to make a move. So I want to dive right into it and field a couple of our questions that we had today. So I know what the change is. We want to look at what are the mortgage qualifying rules now, and a lot of our clients are physicians, dentists, chiropractors, and naturopathic doctors. So what we want to do is we want to talk about the mortgage qualifying rules for doctors in 2023 if they have loans. And why don't we start with that question, Shirley? Doctor has got still got some student loans over here. How does that affect if they are now practicing and they're looking to buy their personal home?
Great question. Comes up a lot, as you can imagine. What we can do is utilize their repayment schedule. So a lot of times in the beginning, there is a period of lower payments. So it could be interest only. And that would be a way to help qualify, as well as being able to set up a repayment schedule. So some institutions offer a pretty generous repayment schedule. Could be 10 years, could be 15 years. So that gives a lot of room for the payments and adjusting them so that it's not this big whopping payment that's going to eat up a great portion of the amount they could qualify for.
Yeah, so what I'm thinking, okay, so I'll throw out some numbers over here. Let's say that somebody has $300,000 of loans,
Yeah.
and let's say they're earning $200,000, gross income. $200,000 gross income, $300,000 of loans. And I
Yeah.
guess my question is this: let's compare that guy to another guy who has no loans at all, absolutely no loans. Okay.
Yeah. Yeah.
Now, let's say that the person with $300,000 loan, let's just pretend that the person with no loans at all qualifies for $1 million of mortgage. Okay.
Correct.
How does that compare with the guy who has 300,000 loan? Does he now only qualify for 700,000, or is it more about with him servicing the interest on the loans, he qualifies maybe for, I don't know, a little bit less?
That's yes, that's pretty much it. The latter is the
Got
applicable.
it.
So that's why knowing that with a medical student line of credit, many times in the first couple of years, it's interest only, so it's not the big payment. It's when it's sitting somewhere around the 3 to 5 year range. If you're on a particular repayment schedule, that's when they start really ramping up the amount of payments. So I do know of two repayment schedules that they offer 10 years. So again, that stretches the payments out. So it's not a dollar for dollar in your first example, whereby $300,000 comes off of it, but the interest only payments do get factored in. It's still a repayment, it's still a debt that somebody is responsible for. And we do have to account that there's a level of responsibility tied to it, but we can minimize it or mitigate it by having interest only, because then the payment is smaller.
So having said that, a lot of my clients will often transform their lines of credit into a professional line of credit, which is only interest only. So if
Correct.
they were to do that, so if it was a student line of credit, maybe it's amortized out for 10 years, for example, and
Correct.
now they owe 1,000 a month, whereas the interest only might be only 400 a month. So are you
Correct.
saying that if it remains as interest only, you would actually qualify for more personal mortgage because they're only looking at the 400?
Correct, correct, very much so. And also in your example where you pointed out that some will start moving it towards their professional line of credit. And especially when one, it's probably held for another topic for us, but what if they are looking at being incorporated, there is certain things that you can switch over, and that will also facilitate for a greater amount of mortgage or freeing up that payment amount as well.
Sure, sure. And so, another question that I had is kind of the elephant in the room. If somebody has a line of credit and they don't have a full down payment, is it is it possible to legitimately use a portion of your line of credit in order to contribute to your down payment for a young, graduated physician or dentist?
Yes, there is. It just can't be 100%, like technically 100%. Otherwise, then it's 100% financing. And legally in Canada, that doesn't, our guidelines don't allow for that. However, there is a portion that is allowed. And
Sure.
it'll be better if it's not a default insured mortgage. I would also suggest a more in-depth conversation so that we would be able to look at a
Absolutely.
scenario.
And,
Yeah.
and at the end, I'm going to share your contact information. So if this does apply for someone, they can reach out to you so you could further have that conversation.
Yeah, and it'll be dependent on the amount that they're looking at. The income portion is pretty well stable in a sense of there's predictable milestones of the income, whether they're dental or a physician or a specialized physician. There are pretty regular increments of income,
Sure.
and that's fine, but it's more of the actual repayment schedule that would be attached to the amount that's pulled out of the line of credit or borrowed from the line of credit.
Wonderful, wonderful. The other question we had is, what if someone was looking for investment property
Yes.
and as a rental, investment property as a
Yes.
rental. Now,
Yep.
how does like, okay, so I'll use this example. Let's say that they had no personal home, but they said with their money that they've saved up for their down payment, they'd actually rather buy an investment rental property. Maybe they're able to still continue to live at home and save money, for example, but they do have a down payment and they are practicing right now and they want to buy this investment rental property. To my understanding, it should pretty much be the exact same as the personal property, except for the fact that you 100% need a 20% down payment because it's investment property. Am I wrong?
No, you're not incorrect on that. For sure, the own resources going into an investment property is integral to the application or for something to be able to be set up. The other part of it too that might be helpful is sometimes there is, not that it's absolute, but it can help, is to be able to have the rental income if it can be confirmed to help with a bit of the offset from the mortgage. We still have to look at the income that the person is able to carry it, because what if it's vacant? So there are a few factors associated with it. It's something to consider, but for sure the down payment.
Got it. To my understanding, when you do have rental income and it contributes towards the income of the property on top of your own income, right now, what's the going rate in BC? 50% of rental income, 70%, or is there no hard number?
It'll depend on the organization or the bank that and their policies. We in the Greater Vancouver area or the Toronto area, we are able to utilize 80% of it. It's a major city. Vacancy rates are very low, so it's very predictable and ability to rent. And it's also going to be dependent on the condition of the property too, because certain ones will be probably more attractive to rent. So that would be something to consider. It doesn't mean that everyone should run out and go get a rental property, but it just means that if they are looking at it, there are a few other factors that are put into consideration as well. All good
Perfect.
stuff, though. Yeah.
Yeah, and I guess the one again, a little elephant in the room, uh,
Yeah.
Airbnb's rental income does not qualify.
Correct.
Okay.
Very, it's very good income, but as those types of rental income, it's really for short stay. So the predictability of it or the sustainability of it is still on the unknown. For example, let's just look at a place like in Kelowna with an Airbnb. Summertime, of course, no problem. Probably easier to rent. That would be safe to say. However, in the winter months, it could be a little bit slower. Also, when you have the higher turnover, what happens with the property? And those are things that an owner would think of anyways, but it's also no different with the person who's going to be looking to set up the mortgage. They need to know what's going to go on with the property. What is it used for? So that is important.
No, absolutely. And then lastly, the second home. So now we have uh, a physician or dentist who wants to buy a second home, and
Correct. Yeah.
the qualifying for the mortgage. Now, are they looking at this? You know, they got to be able to sustain. And I guess by second home, I mean it's a home that they're not going to rent out. It's literally a vacation property, a condo, something of that sort. Tell me, what are the rules around that?
Uh, Great question. It I'm gonna save something for a little bit of a segue in a bit. In To qualify for the second home or a vacation home, obviously, we still need to make sure that the qualifications are still met with the income confirmation and being able to qualify for it. Um, Now, what is a potential is really having the property in a holdco. That's another option as well. We still have to be able to qualify for it, but that again, you and I have probably alluded to various discussions for mutual clients that that is an independent advice to an accountant and to a lawyer to see if that's going to be appropriate. So that I will put in as a potential segue for maybe a couple of other questions or topics.
Yeah. Like I think that one again, it really depends on the scenario of the person. And
Correct.
depends, you know, on the size and what your other debt loads are on how much debt you've taken off on the first mortgage as well.
Correct. Very
Yeah,
much so.
so our second segue is a lot of physicians and dentists incorporate. And the
Yes.
big question is, hey, I make 400,000 a year, but as personal income, I only take out 100. So on the qualifying for my personal home, are you guys taking the 100 or are you guys taking the 400? Are you taking a blend of both? So what's going on in this environment now?
It would be a blend of both. Again, very fortunate to be able to acknowledge that Business for Self has income that they may leave in the company or in the medical corp. But it'll depend on how it looks like. How do the financials? And that's why it's integral for the financial statements to be submitted as part of the review as well. We need to see and peel through the layers a little bit to see what is left in retained earnings, what is the income level, what are the expenses that are being run through the corp. So when the financial statements are being handed in, definitely we're looking at it. So it's not a document we just kind of collect and then file away, but it's something that we do go line by line, and it can only help somebody because there could be some additional income that could be added in.
Sure. Here's an offshoot question. So let's say someone's making 400,000. Let's say
Yeah,
someone only lives off of 100,000. Let's say they pay 100,000 in taxation. So let's say
yeah,
there's 200,000 left over. Let's say expenses add up to, let's say, 50,000.
yeah.
That leaves 150,000 inside the corporation. Now, remember, many of my clients don't leave it as 150,000, leave 150,000 in cash on an annual basis. They get the money moving. So they might say, let's put this in a fund, an index
Yeah.
fund. So they get the money moving. So at the end of the year, the corporation actually doesn't show any cash inside of its corporation. But when you're looking at that, do you kind of trace the money to say, oh, this person had 150 left over? And so now we consider that, they decided to invest it in the stock market, but we really look at that as that is extra income they have, and that can help the situation. Or would you kind of say, oh no, they have no money left over each year?
Yes and no. Yes and no. There's some technical aspects to it. I do follow, or we would follow the money, and also see that it's vested, but it does not mean that it's actually generating income and that we would use it as a way to be able to add the income to qualify. It would be part of the financial picture for the application.
Got
So
it. Got it.
I'm very ambiguous on it, but it means that there is a possibility, and the conversation would be then important to have for
Yeah,
that.
yeah. And then in terms of a holding company, which many of them
Yeah.
also do, especially if they want to buy real estate, they don't usually keep real estate in the operating company. Often they'll create a holding company, especially for dentists who might one day sell off their operating company. But with this holding company over here, are they so for qualifying, like what does the holdco qualify for to buy a piece of real estate? Are they looking at you personally? Are they looking at you corporately? Or again, are they looking at both?
Both.
Got it. And to my understanding, just to throw it out there, typically the interest rate is higher than if you would have bought it personally.
No, that's why it's very attractive with the package that I offer. That I can say that is a very good deal
So
here.
so it's the same then.
Yeah, but
Oh,
the
wonderful.
but the documents and everything we would look at would be no different from a personal application.
Perfect. Perfect. Okay. Last and final question over here. Future
Yeah,
outlook for mortgage rates in 2023. So what's the prime rate right now as of this recording?
6 point. Oh, I
Point
should know that. Six
is
point.
2?
No, 6.49, I believe. Hang on.
6.49. Okay.
Yeah.
So right now, from you being in the industry, have you heard word that it's likely to increase? It's going to stay stable. I've heard it's going to stay stable, but what have you heard for 2023?
Let me correct first. Prime is 6.7. It's only
Oh,
because
wow.
we always work, yeah,
Yeah.
we always work with the prime minus. Okay, for holding and again, I will put the disclaimer that I wish I had a crystal ball to be able to know exactly the direction of it, because I think I would be worth $1 million, and I would be definitely sitting on the Mediterranean and looking at the Mediterranean.
Yes, yes.
Um, but the many economists have the consensus that we're holding steady, and we are in for still similar levels for the balance of this year.
Okay.
Now, the most recent rate, the overnight rate did get bumped up, but or it didn't get bumped, sorry, it didn't get bumped, but the one that got bumped back at Christmas time in December generally is about a 6 to 7 month window before we'll realize the benefit of it. So what the economists are saying is right now we're just starting to see the benefits of the other rate increases. This is what we call patience is definitely a virtue, and we all have to kind of hold and bide a little bit of time. With that in what I am seeing is definitely a lot more stability in the rates, whereas the last year and even just the year before that, we were seeing crazy activity, very dynamic, movement was fast, record increases, and the number of increases were in record numbers as well. So it's very promising. Inflation is definitely holding. That's a consensus there. So cautiously optimistic is what I hear as the consensus from a few economists.
Sure. Now let's talk 2024. Right now, from what I've heard, if inflation does go below 3%, then there is, and if they say that we're in a technical recession, then they're thinking that, we might be able to see rates go down in order to stimulate our economy, or because they kind of say, you know what, we said we wouldn't, we we're aiming for under a 3% inflation rate. We now have it. That's what I'm hearing for 2024. What are you hearing on your side?
Similar as well. Right now, I think the most recent report was just under 6%. So that's why we still have a bit of ways to go. And I think that lends to what some of the economists are saying, that this year is a little bit of a holding pattern. So we still have a bit of ways to go, but I hear similar as well. 2024 could be not bad, but again, I'll be cautiously optimistic, and if I did have that crystal ball, I would be probably looking to also buy my lottery ticket too.
Yes. So real estate in Canada is sort of a question that I kind of wanted to address because, of course,
Yeah.
part of our big financial practice, here at Latitude West, it's a little bit different, and I know a lot of my clients
Yeah.
really know me on the insurance side, but just to remind them, on the financial planning side, on the investment side, we are firm believers in real estate. As a matter of fact, we are now producing literature showing the math behind why, if you want to create generational wealth, real estate, it almost can't be done without real estate. True generational wealth, and one of the things that I like is the type of real estate, which is, of course, cash flowing rental real estate. The asset is in a good area that's growing, and so right now in 2022, at the tail end, we said that there were two areas where we said, based off of our research, and the only two areas in Canada where they were expected to be growing, average price to be growing, and we said there would be a pullback. And so if you did listen to those reports of ours, we were correct. We were absolutely correct. Like Ontario and Vancouver, we said were predicted to go down and continue to go down. They had already gone down a little bit, and they did continue to go down. The areas that we were showing in our last one were predicted to go up. These were certain areas in the prairies and certain areas in the Maritimes. And now very specific areas, and even specific cities, and even dissected even more specific areas inside the city. And one of the things that I want to remind people is that if they are a real estate investor, if you're already a client of mine, we really, and you're trying to look on this stuff on your own, remember, me and my team, you're already a client, you really should be starting a conversation with us. If you're not a client, but you want to be, buy more real estate or purchase some rental real estate, it's hard to rely on just the realtor. And the problem is all realtors are geographically limited, whether they be in, Vancouver, Victoria, Calgary, Manitoba, like they're geographically limited to just that area. Whereas we are able to do a cost benefit analysis of the different areas to say, this is a nice piece of property that you found over here, but this one shows a better cap rate and better cash flow. People here in the lower mainland, unfortunately, prices are very, very expensive. Can you get something cash flow here? You're looking at 40% down payment, probably on average 40 to 50% down payment. And that down payment is quite large as well. Plus you have these high interest rates. So if you believe in the Vancouver story and you want to continue to invest in Vancouver because of capital appreciation, that's fine. We would analyze that. But if you believe that, maybe there is something better out there that I need to diversify into, but I can't seem to find it on my own, then like I said, that's what our practice is built around. And it's not that we don't do investments, TFSAs, RSPs. Of course we do. But one of the things is we want to integrate everything together. And if you're trying to understand, well, how does this integration work for my retirement or for my short term or even for my personal home, then like I said, that's what our practice centers around. So
Yeah.
what I want to do is kind of on the tail end here, if there are any questions, if you're listening to the recording, by all means, feel free to email us with your questions. If there's any questions from anyone listening right now, just fire it in the chat. And if you want to ask us a question, the best way to do that is to connect with us. Shirley's email is here at shirley1.wong@bmo.com. My email through my assistant is info. Oh, actually, unfortunately, that is incorrect. Sorry about that. My email is admin at latitude-west.ca, and that is the best way that you can ask myself a question. Or if you want to connect and just, let's take a quick meeting, a complimentary meeting, just to further some of your questions or concerns, or maybe you'd like to get a mortgage pre-approval. Maybe you'd like to have a conversation about some of the areas that we're investing in or that we're investigating for investments, then we welcome it. We welcome that complimentary meeting. So having said that, Shirley, I think I thank you for your time. And
Yes.
one of the things to quickly mention with Shirley and I is that we are looking to do an in-person private dinner. It's in Yale Town, and it'll be like a 3-course dinner. And we want to talk with those clients who are interested a little bit more into they're kind of ready for the next step, so to speak. And that next step is, what does that look like if you're working with me on, buying investment real estate in other areas outside of the lower mainland? What does that look like? Where are these areas? What does the process look like? And if you are thinking of setting up a holding company or buying a rental property or buying a second property or even a first property, and then Shirley could talk a little bit more and expand on some of the things that she's talked about as well. So if you're listening to this and you said, hey, I'm interested in when is this dinner? What will be spoken about it? We haven't set the date, but we are in the process of it now. We just have to secure it. Private room in Yale Town. We're looking at the keg right now. It can usually hold somewhere between, probably comfortably 8 to 10 couples. And we do ask that you bring your partner, by all means, make a bit of an evening out of it. But
Yeah.
if you are interested, if you're already a client, that's great. And if you're not a client, but you are interested to learn a little bit more, have a very, very nice meal with your partner and get some of your questions answered, connect with us. You could go through me, admin at latitude-west.ca, and let us know. And as soon as we finalize the details in the next few weeks, we'll just let you know, and then we'll go from there. So Shirley, thank you
Thank
again
you.
for everything. As always, the information was fantastic. And if anyone would like to reach out, we look forward to hearing from you.
Thank you again, Christian. Thank you very much.
All right,
for
we'll talk soon.